numbers and how it's stacking up against expectations?
Well, Harsh, it's a disappointing set of numbers, and when you look at the consensus Bloomberg estimate, revenue was expected to be 40,929. It's coming just about 300 crores lesser, but that's fine because the EBITDA number is the key disappointment in quarter four. EBITDA has come in at 4,264 crores. In the same time last year, EBITDA was at 4,684 crores. So definitely a miss there. We are also anticipating EBITDA was expected to be around 4,800 odd crores, backed by pricing trends in this particular quarter. So when you look at the overall EBITDA margins specifically, it's coming at 10.5% in quarter four. Last year it was 12.8%, and that is one of the key disappointments because while margin was expected to fall by roughly between 80 to 100 basis points, it's actually more starker than that, and I think that's a key negative for Maruti. When you look at the fine print, and the net profit also coming at 3,711 crores versus estimates of 3,856, so about 150 crore gap in terms of net profit. And when you just look at some of the key numbers, the other expense factor is quite high this quarter. It's up 14% compared to the same time last year, and while we don't give a breakup of that, we'll have to look at the fine print of what led to that, and I think some questions will be answered in the press conference scheduled at 3:30 today. But other expenses being high is one of the key negatives. Apart from that, when you look at the one-off expenses, some increase in employee expenses has been seen as well, coming in roughly at 1,500 odd crores versus 1,300 crores. And in this particular quarter, we just had about 3% growth in terms of sales. So at least in terms of the first fine print, the numbers are below the Bloomberg consensus estimates, as well as, EBITDA has fallen by 9%. That's a key negative.
Okay, so couple of negatives more than positives. Mayuresh, do you view it the same way or something different in the sense how is your view stacking up as you're looking at this in more granular fashion?
No, so as I said, right, it's a combination of two factors. If you probably look at the P&L, input costs have gone up significantly quarter on quarter, year on year. And the inventories have also probably stacked up a tad bit, which is creating some element of pain on the margins front. Now, how recovery happens in terms of demand, how competition plays out, and how pricing can support the elevated costs is something to be seen.